Hello. Welcome to another ES Futures trading stream. Today is Monday, April 10th. It is 8:51 a.m. This is for educational purposes only. Please take what I say with a grain of salt. I do this as a part of my job to keep myself focused on the market and be very careful with what you do in when you trade on futures. I will need just a second. This is something that happened. Before anything, I want to talk about what's happening now. This is a development of a trade that was in the world since since Thursday actually, right? This happen. This kind of things happens all the time. We got this Friday, this Thursday, not Friday, my bad, because there's no Friday here. This Thursday was extremely weak rally up here. If you remember, the volume in this day was extremely low. There is a very painful rally to the upside. I hope you have not get caught with this in this downside movement. Now, but the interesting thing is the nuance here on this day. It was this single print here. It is rare, very rare that a market leaves this kind of prints. Usually it comes to repair these single prints, during the session, but this was Thursday. There was a holiday, almost a holiday. It was the last day of a short week. Just very short-term traders here getting incredibly long here, incredibly long. And Friday, during the holiday, we have jobs report, or what was that? Okay, it was jobs report. And look at this, look at this POC, how wide it is. Incredibly wide. It has been a while since I see this kind of formations. And the other side of the market is coming back to check these ones. And remember this, when you observe the market, you got a terrible day here. It is an outside day though. It's an outside day. You have a really terrible day. Extraordinary wide overnight POC. Holiday. Now we open during this Sunday here. And what are the odds, right? What are the odds to the market having an upside continuation or coming back to at least retest the overnight POC? Now there's a spike to the downside here. And more often than not, these kind of spikes are used by traders to close the positions, right? Sophisticated traders that know what they're doing, they use these kind of spikes to close a position. The goal here, the aim was either POC or this one over here. Ultimate destination 4100. Okay, now it is almost 9 a.m. The market is extremely short now. It's very short. It was so long here. Now it's getting short. Look at the volume. Look at the volume of this overnight session. Can you see this volume? Such a huge break, and the amount of volume is almost zero to me. Just check this one: 110, 131, 240, 239, 230. This is better. This is low. Okay, this 240 is low. Now go ahead and got 130 or one even today. We have Monday, and we have even less than Friday. Did you believe that? Okay, be very careful with this market. Be very careful with this market. Okay, this high is very questionable here. The overnight trade does not fix this kind of highs. The market may have trade during the overnight, but doesn't fix. I don't consider this high repair. Okay, and why I do is questionable because of this high here. The overnight here could be one, but it's not. This is overnight session because it's the high of the lower distribution of this day up here. This was a very um, not the elongated market, truncated market to the downside, and with a lot with a lot of selling down here. Little weak sell. It looks like a long liquidation. We talk about that on this day. That looked like a long liquidation here, and this day pointing to the upside too. You know, remember the knife formation. I will before doing the traditional, the usual review, the monthly, weekly, and daily. I will ask you for. I will need to take a small break, maybe like 5 minutes, and then I will come back. Okay. Well.
experience. That's something that just doesn't happen. Almost come to love the problem arena. The challenge response, in a word, is exactly that. Is that my emotions become engaged more powerfully. I have this incredible energy experience from the positive emotions when I face a dilemma. I believe that I can deal with this. In fact, I love dealing with this. I'm willing to put myself on the line because I know the benefits are there and I believe in myself as a performer. But that's a learning experience. That's something that just doesn't happen. That only occurs amongst the greatest performers, those that have consistently mastered the mechanics of energy management. And that's exactly what this program is all about.
It's interesting that my favorite story about someone who overcomes all the time is the story of the fool in the Middle Ages. In the Middle Ages, literally the fool was a cultural presupposition. Every king had his fool. And the fool was the only person in the kingdom allowed to make fun of the king. And one day this fool in this particular situation goes too far, and he tells a joke on the king that the king doesn't like. He calls the guards in, he says, "Take this guy out of here and kill him." So they start to haul him out, and the nobility comes up and they say, "King, you can't do that. This guy has worked well for you for 40 years. So he says, "Whoa, come on back, bring that fool back." So the fool comes back, he's standing very calmly in front of the king. And the king says, "Look, I'm a divine right king. I said you gotta die. I can't go back on my word. But," he said, "because you've worked well for us for 40 years, I'm going to allow you to choose the way you want to die." And the fool bowed slightly and said, "Sire, if it's all the same to you, I should like to die of old age." And what we would have done is we would have said, when the king says you can die any way you want to, we'd have opted for quick, instant death. And I could see myself saying, "I'll take a gun, I'll take cyanide, I'll take anything to help me die quickly," because we missed the point. We didn't bring our genius to the table. But what the fool has done for 40 years is his job, is to bring joy and fun and humor to pain and sorrow. And so he has practiced every day. He's almost had his own mental toughness training program. He practiced every day in the midst of problems to turn them around, to have fun with them, to play with them, to love them. I love problems. That's the fool's response.
That is a learned response. That is something that our toughest athletes have learned over many years of conditioning.
Good number. But what you don't want is you don't want to have
All right, guys. That was another sample of Metaton strain. Okay, let's go back to what we were talking. I'm sorry, I, I got, I got to leave for a moment. Okay, let's take a look. Let's take a look to what we always do. Okay. Oh, this is a market. Okay, okay. Let's check what's going on in the market. Look at God. Look at gold, for example. Let's take a look at gold. Do you remember that we were talking about gold like for this market? This one, see, the one you see. You know, the market made a new high in the overnight, like 1 month ago, something like that, maybe 3 or 4 weeks ago. It is rare that the markets. Remember this. I'll come back to this later. It's rare that the market does leave making these kind of highs and leave it like that. And usually the markets come back to check that high that was made in the overnight. And it's also rare now the market has made a new high. That make markets make a new high. Only one. Usually markets do high after high after high. I don't know how long can go on, but it's rare that also that there is only one. Crude, man, this crude. Look at these lows here. 1, 2, 3, 4. Crude low, crude is high because the news, right? The Saudis say they were cutting production. Um, Dollar is Yeah, it's like it didn't do too much, it didn't do nothing. But I am interested in bonds now. Bonds make it high. It gosh, look at these highs. One, two, three, four. Three highs right, at the same. Well, the market was solid. At the same. This could go high. This is the 10. This is the 30. What I'm checking is it is inside a range here. You know, it is inside a range, and when the market re-enters the range, it could target the opposite side of the range. Um, I'm very interested in this range because there's no support here. It looks like a short cover. And this one also looks like a short cover, even though it's having a little bit more an extension than the 30. The 10 is having more extension than the 30 here. Let's take a look now to the monthly. All right. The monthly has, there is no change in the month. Yeah. It is, we have only the only 1 week of this month. The first week has passed us by. We still have 3 more weeks to go. The market is right there at this. I have noticed that the market has been sold like a couple times from this level, 41.41, 41.30 something. Let's call it 41.41, 41.40. Okay, look at how many times has been traded. One, two, three, four, five, 6 times now. It's been sold. It's been sold from that level. But a couple times the market has traded through this level. Here, here, and now here. You can almost put a trend line here, right? You know, man, the thing is, when you see these things, it's really hard to let it go. Not that I trade, not that I use this to trade, but traders see these things. Now you can see almost, perfect over this level. Nothing has happened. Nothing has happened really in the monthly so far. We have a 12-month range. 12-month range. The market has gone nowhere. But this is just, catching my attention that we have this market being sold for this level, and now it's right there. Now, it hasn't done anything. We have a breakout to the upside of this range. We have 1, 2, 3 month range upside breakout here. Breakout fails and targets the opposite side of this range, but it couldn't even take this one. And now it couldn't. I consider this breakout failure. The action to the downside here down because we have another breakout here to the upside of this previous range. Right? Breakout failures targets the opposite side. But this is different now from this breakout failure that fails here. There's too much technical things here. I'm trying to, you know. I guess I'm talking too much about the monthly. Um, what I'm trying to say is once a market fails here, once a breakout fails, the destination of this trade becomes the opposite side of this range. Now, if I'm going to monitor for continuation, if I'm short here or somewhere in here, targeting this low, the previous month goes to the downside, but this month taking this high out, what that actually does is telling this market is telling me, you know what, you're wrong. Okay, it's time to rethink what you were doing. It's kind of too late at this moment. Maybe it would have happened. The alarms will start to sound uh, when this month comes back and takes this high out here. And notice where it was sold. This is 41.41, and this is 41.25. One tick above this level. Now, this is just too exact. To me, it's too exact. This. All right. Being too exact tells me who is doing the trade, who is in the market, who is the dominant force. Just very short-term trading stuff, or the weakest. Now the weekly is still going to the upside. We have an upside trend 1, 2, 3, 4 weeks in a row going to the upside, and this week, notice how short this range is. It is going to be very easy for this market to take either the high or the low out of here. Taking the low out marks the cessation of one time frame high here. Now the trend to the upside will be done, will be over if this market of this week trades below this low. Okay. Now the thing I see here is I have a breakout level, which is the 4082 that I have in market here as well in my market profile charts. This is a resistance now. I call it resistance because traders call this resistance. Traders know where these levels are. There we see this. It's kind of like it will be just logical to expect some buying coming at this level here, or some back and forth around this level. If you have a breakout from this level up here all the way down to here, I expect something happen here. If what you expect, what is expected doesn't happen, it also tells me a message, right? It cuts a message. The market is telling me, you know what? Screw you. You just keep the way how the market, if the market keeps breaks to the downside and just trade like, as hot knife through butter through this level, it means that there is, the market has made up its mind. It's mine. That is what, but remember, this is just one piece of information that I'm seeing, just one observation that I have here. I got the potential of firecracker effect here because I got one high, one high, one high here. This stops up here, and the only gap that can be seen in the weekly is up here. The daily. Let's take a look at the daily. The daily has already changed, right? No, my bad. The daily was going to the upside. Can you see the trend? We talk a lot about how weak this rally is, how mechanical this rally is. The structure of the market is incredibly weak over here. I have the 4082 down here. Notice how this high here, this low is weak. This low came from this high. The next low came exactly from that high, which makes it weak. This one as well. This one, the same thing, not just from this high, but over 50. And we had a 50 moving average here, and this was bought exactly from the 50. The next one, we have a gap. Next one, very close or around the 40, around the 100 SMA, and next around the 40, around the 200 SMA here. And every single low, all the way to the 4900 here. I can see weakness here. Which when I talk about weakness, I kind of like I'm referring to, as we will see later, that very short-term traders in this market, very short-term traders in the market. Um, we got a range here, 1, 2, 3, 4. Can you see the range? I hope you can see the range forming that has the market has formed. We were talking a lot. We were talking a lot about this halfback here. That the market has traded multiple times around this halfback. It couldn't take this high of this. When the market re-enters at this range, the target, the potential destination trade is the opposite side of this range. Has re-entered, traded through halfback, was bought from halfback once, and now is being sold from halfback of this range. But I hope you can see the bigger picture here. That's what I'm trying to say. I'm trying to show that where where the bigger time frames traders or money is. You know, it's very hard. This I would say it's impossible to know for certain. You can only see after the fact, right? Now, if I go to market profile, I hope you remember. It's very important to carry on information in trading because what is happening now has a lot to do with what happened before. We have we talk about this today's when I started the stream, right? This was the last day of short week, a long weekend. We have Friday's report. What report was that? My God. Let me check. That was that was employment situation here. We have a big spike to the upside. We have a spike to the upside, and the market now is rejecting the spike. We have the spike, and the market, we are just 10 minutes before the opening. The market is going to open below this spike. Now, the consideration here is this is holiday, very low volume. Now today also really low volume, extraordinary low volume here. Notice how this day repaired this, basically took this overnight out. And remember when we were talking about we were talking about gold, how rare it is for the market to leave a high that was made in the overnight. That is what happened. That happened in the US as well. This day, March 4, it was Monday, I was Tuesday, the market make a new high, but it was made in global station, in the electronic market here. And that's why I have a market here. That's the only high on the overnight that I have a market. It is very important. I will carry on this level here until it's used, until it's necessary, as long as it's necessary. Gold is having a hard break. What I mean, what I can say of this market is this trade, this downside trade has ended here. You know, we have this downside, this day to the downside, that leave us a non-excess low, non-excess high. The overnight was the same story, and the next day we have a sequential trade, taking these highs out, then the lows out, then this lows out, and then this highs out. Very, very mechanical trading, very technical trading here. Now, I want to see what happens now. The 4100, the market coming through this level a couple of times. It is also an indication that something could be going on here to the downside. I got this information, right? I got this information here. It might not be relevant now, but could be later. Now, this market, the overnight inventory is, I would say, is very short now at this moment in time. There's a lot of trading that happened during this day that is underwater now, right? Now, I got these weak levels here. And the market traded, the thing is, the market traded to the upside on Thursday all day long. I had only this, pullback low, very late pullback low. Late pullback low here. Right? market opening inside or above this pullback, it, it tells me that there is no change in the market. But when the market takes this one, this references out, it just shows that something has changed. Now the thing is, it doesn't mean that the market is going to break. Okay, it doesn't mean we're going to have a hard break today, because after all, this is an outside day to the upside. I try to remain as neutral as possible. There's a lot of contradicting information. I am not going to trade. I'm not going to try to make anything up. No, I will just let the market develop, settle before doing anything. Now, remember, we have a 5 day range here, and value pretty much is overlapping. You got value here, overlapping here. All values are overlapping to each other. Okay, this formation here looks like short covering as well. Mhm. Shorts from this area maybe being forced to cover. Oh boy, I need to open another chart here. Don't try to look for a trade. Look at what happened this day. In this day here, the market went to the upside. Look at the volume. The market has really low volume, really extremely low volume. I am opening my company here. I forgot that it didn't open. Oops. Oops. I try to remain as neutral as possible in situations like this, especially considering that I consider that this trade has been completed. The trade for me was repairing this nuance that I have here. That was it. On Thursday, I had a trade to the upside, but I let it go when the market repaired some weak levels in this area here. I feel like a fool, right? Because the market really make a big run to the upside. Okay. What the heck is going on here? Okay. Leave. I'm going to check my histograms. What I have here, well, this non-excess, look at the amount of volume, the upside, a lot of absorption here. Weak level here, below that, just the general weakness down here to around the 40, 70 maybe. Okay, forget about that. Much time I have? 4 minutes. Oh, look at that, man. Market's getting short. Okay, the market has seen the 4100. This is the last week level that we have from Thursday. All right. I got this overnight. The only oh, okay. All of these shorts now from the overnight on this day have been crucified now. They've been squeezed, man. All these longs, my bad, all the longs. They are getting killed. Same as Thursday. All right. The potential destination is this side of the. But I will let the market open. We still have like 1 more minute before the opening, and let's see what the market does here. Now traders are getting crazy. Traders are selling this market. I can see that. Market. Notice how there is no volume here, right? There's no volume here. No volume here. No volume here. If you have any questions anytime, please just let me know. All right. I will leave this. I want to see what happens here. What happens here. I'm going to leave that market or that this overnight is open. Oh, all right. What the heck happened here? It's not loading. Okay, right there. Uh, Opening inside previous day range. Advertised chop. Chop is very expensive. Can be very expensive. Chop is a market that has enough makeup its mind. The odds are high. They also having chop are high when the market opens inside previous day range. I guess I can consider this when the market open here. This one I will let this one go. Let this one go as well. let this one go as well. Sell the last. Questionable high, my high. And it's very close to this level here. I will also remove my this one. As well that one. Okay, market has took yesterday. I mean overnight lows. Overnight lows. Destination. Oh, now we are. Well, market is right at 4100. Okay, 4100. The next reference in the low side is this low, followed by this tiny, minuscule gap down here. And most important, the breakout level, the weekly breakout level down here to me. Gold is having a gigantic break. Big break in gold. It's taking, it has almost taken all of Tuesday rally out already. Yeah, it actually did pretty much everything. All right. This low is not good here. I didn't like. Remember when we were watching the overnight, we were talking about our market profiles. I didn't like how this happened. Remember, just before the opening, there was a push to the downside. I don't like those kind of moves. Those kind of moments. Really low volume in the market. This was the lowest in the last 20. And this says something because being Thursday the lowest, and why today being even lower than that. I guess we were talking about this day how 60 something was low volume for an opening, and now we're having even lower than that. Early session is coming. Friday we have some banks. I hope you have watched Jim Dalton's webinar, the last one. Also his market update. This profile is terrible. This kind of moment at the downside is horrendous. It has took almost, well, pretty much all of Thursday rally out. Now this week low here, this week buying from Thursday as well has been repaired. Well, that's good now. Again, the market has took 4100. How many times the market has been bought from 4100? One, two, three times, right? Guess what we have below the 4100 here? What we have below this area here? bunch of stops, right? Please let me know if you have any questions. I will. This day, this day here, there was a lot of volume coming from the 4100. Traders do what works until it doesn't work anymore. Let's see how. To me, this inventory here, I mean, it's extremely short. Market is too short from the overlay. The buying does is very weak as well. Level 4100 right there. This kind of profile on the upper side is something I want to give more time to the market to settle. There is a lot of all of these traders from up here have been cut short now, and from the overnight, from Friday's overnight as well, they have been squeezed to the downside. The longs from this day, from this area, have been forced to. Probably they are selling medium margin calls and all that things, right?
No, this volume is going to be extremely slow, extremely low today. Now, if I am going to have an upside, market going to the upside, this is not, this is something that I would like on the lower side. The buying coming from 4100, that's one. The second thing is a lot of volume down here. That's bad. To me, it's bad. All right. The high. Look at this print here. Can you see? This is just now. More is coming to the upper side. This is too short. This market is too short from the overnight now. But I don't like that low. Um, it's kind of like boring market right now. Ah, again, what what we were talking of, what's happening in this market? There there is evident lack of long-term money, long-term trading money or investment money. They're just watching here. You can tell that by where this buying is coming from. That's one. So now it's more likely that this small rally, not rally, Yeah, we can say it's rally, right? It's happening right now. Coming from 4100, this could be a reaction to the short, when the market was getting too short in the overnight, especially in these periods, right? Traders are just selling this market. They didn't sell up here, they start selling down here because they're afraid of missing opportunity here. What the heck here? There's a lot of trading around this. Now look how wide this histogram is. Very wide histogram. The high and at the low as well. This could go in any direction. There's a lot of chop going on here. I will let the market chop. Uh, I am. I need to make myself some coffee here. Otherwise, I'm going to fall asleep. I'm going to leave you with this audible book now.
Understand that by staying challenged, you have the best chance of solving the problem and of also bringing your best to the situation day in and day out over the long term. So we're really learning mental toughness is abnormal. It's a very unusual response, but it is exactly the response, the energy response, that produces the best results, the peak performances, the white moments. Because this energy component is the single most important dimension in the ideal performance state, it's important to really look at it closely. We looked at two dimensions relative to this concept of energy that really proved to be very, very helpful. The first, we know that all of us experience energy on a continuum from low to high. The intensity of the energy, we all relate to that. Everybody who's listening to this tape right now is somewhere between 1 and 10. 1 being virtually no energy, you're asleep pretty much, or 10, you are so fired up and excited that you can hardly stand it. That's one dimension of energy. There's another dimension which really proved to be quite useful, and that was the dimension of kind of the quality of that energy experience. And that was that some states of very high energy are very pleasant. They're very enjoyable. Some states of very high energy are very unenjoyable. We actually now can create a continuum of like from 1 to 10, from 1 being very unenjoyable, not pleasant at all, to 10 being extremely enjoyable. And that really created basically 4 cells.
These are the 4 cells that make up the internal energy states. High positive energy is a combination of a high intensity of energy that's fueled from very pleasant emotions. It's energy without tension, a joyful enthusiasm, but enthusiasm that's under control. This is performance central, definitely where you want to be for top performance. Energy that's very pleasant but of a lower intensity is called low positive. You're calm, easygoing, and in a state that encourages creativity. This kind of energy is ideal for relaxing and recovering. The high negative is that blood-boiling fight or flight condition. You're angry, you want to get even, and for a performer, it can be a very dangerous place to be. The 4th cell to consider is the low negative energy state. Nothing gets done. You feel drained and listless, depressed and overwhelmed. You want to go hide somewhere. As you'll see, staying on the positive side of the scale is crucial for performing at your best. And being able to move from high positive to low positive, from performance to recovery, and then back again, is a vital skill in mental toughness.
We find that all of those energy experiences are part of our lives. and that there are certain things which are very characteristic of all of those energy states. We found that, first of all, peak performance is universally, as we said earlier, a function of high positive intensity. An energy experience that's high, but also fueled from the positive emotions, hence making it enjoyable. Energy experiences that are high negative, in the form of anger, in the form of fear, you have great intensity, but it's not enjoyable at all. And then we have energy that's low and positive. That's an energy experience that we frequently find when we're relaxing, when we're quieting, when we're involved in an activity that's maybe not that motivational, and it may be we're just laying back. It's very, very enjoyable just to kind of float. And on the other hand, we see the low negative, where we have someone who is not energized at all, and what little energy is there, it's like it's not fun. It's in the extreme, this is the burnout syndrome. And we're beginning to understand that our best performers are very skillful at identifying where they are in which of those quadrants, and specifically how to get to the high positive energy cell the fastest. And we're also coming to understand that moving from the high positive to the low positive is an essential skill balancing stress and recovery. That the more easily you can move from a low positive to a high positive, the better manager you will likely be of energy as a total.
Remember Peter Drucker saying that first and foremost, we are managers of our own energy if we are to be great performers. And number two, we are orchestrators of the management of energy of those around us. When you watch Joe Montana step off the field, he is perfect low positive. There they are, the 49ers, losing by 2 touchdowns, 3 minutes to go, and he's looking around to see who's in the crowd. He's talking to his coach about where they're going to dinner tonight. But the moment he steps back on the field, he activates the high positive arousal zone, and he goes in and he dances and he plays and he moves through the opposition. He is a really terrific manager of energy. So my job to ask myself as a performer is, first and foremost, how do I get to the high positive energy just before I go into a performance that's really important to me? And once the performance is over, how do I drop back down to low positive energy? Then the second question to say to myself, I have certain rhythms during the day. Sometimes in the morning, I happen to be high energy. What about you? Where is your energy level in the morning? Where is it at midday? I know that a lot of people have low energy in the afternoon. How do I give that a little kick in the rear end to bring that up to high positive? And so I can begin to look at myself as a person who first and foremost takes care of my own energy, understands where I am on the energy chart, and kicks it to the appropriate zone just before performance. And I think that's really important.
It's important also to understand exactly what feelings belong where. If you're in the high positive energy cell, you're going to feel energetic, you feel lively, you feel stimulated, you feel vigorous, enthusiastic. You feel like you've got boundless energy. It's a great, fun kind of energy. If you're in the low positive, you feel relaxed. Sometimes you can feel tired, but you don't sense this driving passion. You have kind of entered a recovery cycle, and by choice, it's simply kind of letting go. It's a feeling of letting go.
We call that, by the way, the space cadet syndrome. That is, you're really enjoying it, but if you were playing tennis, you forgot your own score, but you know the score on the third court down. You're just a little spacey, and it's a great place to be on relaxation.
In terms of high negative, you're either fearful, anxious, angry, frustrated, upset. You want to get even. You have lots of intensity. You have emotions, but those emotions are not fun. They're not enjoyable. Is John McEnroe having a great time? If you'd ask John, are you having a good time now when he's throwing a temper tantrum? He'll look around, and then you better duck real quickly. Low negative is a feeling of kind of being bored, of being annoyed, irritated. In its worst form, it's the feeling of being burned out. We need to be able to take inventory. We need to be able to understand the connection between our moods and our energy experience at any moment and our ability to perform. You need to always be able to take inventory of where you are, which quadrant of energy, which cell of energy. And in the past, we have always thought of ourselves as kind of being at the mercy of whatever conditions make that happen. We've never really looked at that in the sense of I can take responsibility for which cell I'm in. Well, I will tell you, the Mentally Tough program teaches you to take full responsibility for which cell you end up in. And the majority of your performance life needs to be in the high positive or in the low positive side of that axis. The more time you spend in the high negative energy cell, you will eventually pay a price by going to the low negative energy cell. And the consequence and the price is both on happiness and poor performance. So, first of all, we've got to take inventory, and second of all, we've got to take responsibility for whichever cell we're in, and that begins us on the road to mental toughness.
You know, one thing you might add to that in terms of environment is that the very words you use for high positive are the words that if I ran a home, my house, if I ran a business, my corporate culture would be built around the words alert, energetic, stimulated, inspired, enthused. If I am enthused, then we have team going. So you can walk into a corporate culture any day of the week and you can feel those words. Either they're there or the fearful, angry, frustrated, vengeful words are there. And the corporate culture then is helping or hurting you toward your own performance. What we're saying, however, is that it doesn't matter the corporate culture. If you're mentally tough, you are responsible for your own. If you are managing a household, a classroom, or a company, then your job is to also extend what makes you a great performer into the environment itself and surround your people with that kind of an environment.
I think it's important to make a distinction between the peak performer and the workaholic, because on the surface it may appear as though they're pretty much one and the same person. The peak performer has learned how to periodize their work episodes with appropriate periods of relaxation and recovery. They've learned how to manage energy effectively by managing their recovery times as efficiently, as effectively as their stress work times. The workaholic has not learned that lesson. They go until they drop, and then they try to go again, and eventually workaholic leads to burnout. Not the case with a peak performer. They can go forever because they have the balance of joy and fun and energy and relaxation and recovery. So there's a big difference.
You know, I think of a good example is Ross Perot, who works extremely hard but balances out with a lot of fun and joy in what he does. I also have a friend who's the chairman of a insurance group, the Madison Group, Neil Groff, who literally looks from the outside like he's working all the time. But the guy has scheduled a 3-day vacation every 10 days. And he will come back from a 5-day trip to New York City trying to deal with some insurance problem. The moment he gets back there, he's up to Vail for 3 days. And people think he's always moving, but what he's doing is really putting that periodization effect into his life. I think in order to bring this particular cassette to a close, what we might end up with is helping you realize and being consistently aware of your particular energy zones. And you might think of high positive energy. It's that quadrant which you're pumped, psyched, jazzed, wired, treed with energy. And it's all fun. It's all positive emotions, love, joy, fun, humor. And what was a recent time that you were there? Has it been today? Was it yesterday? What were your feelings? When are you usually there? Are you a morning person? Are you an afternoon person? When are you at your best from an energy management point of view? Let's look at the other cell, low positive. And remember, these are the two cells that we want to constantly go between. We want to raise our level of energy for our performances. And when the performance is over, we want to understand how to de-stress, how to relax into low positive. It's kind of laid back. It's kind of, you're not telling jokes, but you have an ability to laugh. You're not really focused, but you're having fun. You're totally relaxed. Now think of a time when you were in that phase recently. How do you trigger that phase again? Do you come down off your high positive energy well enough? Are you a great energy manager in that case? Then let's look at the side we don't want to stay on very often. Your ability to notice that you're getting angry, that you're in an angry state, that you're in a vengeful state, and immediately say, no, I don't want to be there. The cost on my system is too enormous. How do I get out of that state? I want you to think of a time in the last 2 or 3 weeks where you let your anger get the best of you, and you were in that state. Probably you were kind of proud to be in that state for a little while, and you wanted to just stay damn well there. How did you get out of it? How do you take yourself from high negative to a more relaxful low positive? Because it's your way back to the performance state. And lastly, think of the burnout state. That is what we call low negative energy. I'm bored. Life has no meaning for me. I'm upset. What we found in corporations is when we have one burnout, we usually have a bunch. Burnout is very contagious.
It's very important that you understand what your tendencies are. Where do you typically end up in a given time during the day? What happens to you typically? We all have patterns. We have to learn our patterns and then come to understand how to break them. But first of all, when you face problems, do you end up kind of in a tanking zone, which is either low positive or low negative? Do you kind of withdraw energy? Do you end up getting very angry, very negative, very intense with negative emotion? Or do you get nervous? Do you get highly frightened? Where do you typically end up when you confront problems and adversity? That leads to the next step, and that is learning how to manage energy experiences so that they are consistent with our performance objectives. Performing at our best means high positive energy.
Okay, I'm back. That was mental. That was uh, kind of like 5, 10 minutes of mental toughness. This is a book. This is a training actually. I guess it has, I don't know how old these series are because of it is in cassette. It is an audible now, but it's very good. It's very good. This is the name of the book. If you are interested. Okay. Now, just take a look at what's happened. There's a lot of congestion in this area. What is happening now, I don't like it at all. I don't like it at all. If this market goes to the outside, okay, I will let it just leave it alone. And look what it's coming from. Again, it's coming from 4100. It just repaired this level and I was sold again. It was bought again from that level. The congestion here, you know, paired with the lack of volume. Now look, just remember how low Thursday was, and now we are having even lower volume than Thursday. The meaning of that, and just very short-term trading here in this market. Be careful if you do something here. Just be very careful. I guess ah, we were talking about how opening inside previous day range advertised chop. Now we don't have a good high, we don't have a good low, we have inventory that's very short. We have a high that was made in the overnight, we're buying from the 4100. You have a questionable low here, very mechanical low on this day, another mechanical low down here, lack of access here, poor low here. So mixed signals everywhere. This market has enough reasons to go to the upside as well to the downside. And when we have markets like that, what do I do, right? What can I do there? If I look for a trade, I'm certain we find a trade. Just give me a second, please. Oh yeah, I'm tired of these spam calls. I was talking we were talking about when we have this kind of environment, I'll just step aside. No, a good part of trading is knowing when to step aside. Remember, being flat is also position. Trading is not just being long and short. You can also be flat, and that's also a position. Most part of the time, you will be flat. That's it. So why I would be long in this market now? Why I would be short? It can go in either direction. So what are my odds? 50%, right? So what do I do there? It's 50% the same as tossing a coin. So those are my odds here in this market right now. This can have a big rally to the upside, but so I mean I might miss a trade here, but so what? Well, it's something that I don't like it. I'm not that kind of trader. We were talking about how much volume this A has on the lower side. And it's easy to forget. It's easy to forget how this just just imagine here, right? Just have one period has passed, just have hour here. Now can you remember what happened here or here or here or here or here? It's even further back, right? Or what about the previous days as well? And what happened here? Now it's very hard to remain to be aware of everything that's happening in the market or what happened before. Look at the histograms here. Look at the amount of volume on the lower side. Now look what happened in B. Dries here and volume comes here again from the 4100. Who buys there? The 41. You have a pull high, no a pull low as well. I mean, this market can go in either direction here. Now let's go back to the overnight. This overnight session was a trade. Remember when we talk about these spikes here? These spikes are usually are used for traders to get out, to close positions. Right? Now, did you went short here, somewhere in here? That tells you also, this gives, in the same way how market generated information tells information about the market, your actions tells information about yourself. Analyze that, how to use that. And a lot of what we do here has to do with counterintuitive thinking here, probabilistic thinking. We are not programmed to think probabilistically. Humans are not like that. Now, those our ancestors that thought that way are dead. We think emotionally. When we see somebody, when we see something, we tend to believe, to think something about that thing or that person or that whatever, that situation in one way or other, depending on our experiences. But if you have an idea of somebody, of something, of a situation, just after a couple seconds you were exposed to that situation, after a couple seconds that you have meet the person, you have an idea, right? But what are the odds, right, that you are right? You have just meet that person 5 seconds ago, and you already know that that's a good person, that's a bad person, that person is this, that person is that, this is that. But what are the odds, right? That your thoughts are right after just 5 seconds of knowing somebody. That's we do that because our decisions are guided by emotions. We don't think probabilistically. We are not like that. And what are the probabilities here, right now, at this moment? It is 10, 11, and 20 seconds. What are the probabilities here? For this market to go higher or for this market to go lower? What are the odds? I give the same odds to both directions. Right. I want to go further. If I look for a trade, I will find a trade. I'll say, okay. I will say, okay, this market is short. This is absolutely high inventory, short inventory here. I got this. The market is too low. We are inside yesterday range. This market is going to the upside. I'm going to buy. I'm going to be a buyer. Okay. If I want a trade, I will find a trade. More likely the wrong one. Just think of that yourself. How many times have you made that? Well, how many times you were right? If you're right, well, it will be reflected in your balance, right? You will have more successful, not more successful trades, but more profit than losses, right? Because we don't measure trading in how many times we win or how many times we lose. Because losing is part of the business. We lose a lot here in this business. Many times, a lot of times. People that is not in trade can't believe that. Why you are doing something that you're losing all the time? But the key is, have an idea, have a perspective what the market is doing, understanding the market, being in sync with the market, and then you place a trade, right? When you see an opportunity, you try to seize the opportunity. The location of your trade will tell you, okay, you're wrong, you're right. Very close. If you are wrong here in this market, what are the odds that you will be better up here or down here? Where you buy, for example, here, right? Are you going to buy here at 4100? You could have been a buyer or could be a seller here, 4100. If you are a seller, if the market comes back to 4100, that's my out. I am a seller here. Well, the market is up here. Okay, I'm not going to wait the market come back up to here. That's an example only. The market telling me, you know what, you're wrong. And it just take a couple ticks to do that. I don't trade futures, I trade options, but I trade the options as if I were trading futures. I don't know about alphas, beta, gammas, or whatever thing is options are. Usually, or most people trade. They see. I don't know. There is some things that I don't even know, right? What I try to do is I try to be in sync with the market, try to know what the market is doing. When the market was up here, for example, when the market was up here, I'm going to give you just one example. When the market had this day is a consequence of this day. Remember, there was also an overnight here. Let's put it out. There's a tremendous overnight POC here. Very wide overnight POC coincided with this day. And look where this low was made. Check. Did you remember we were talking about this nuance during this day? What could happen during this? And where the market was being bought here. And again, the business was bought here again. Today. Now this trade is over. Right? This trade is over. Once this take this one, that's out. That was the trade. It was either this one, the very wide overnight POC from a holiday, or this one. You want it. Spikes are used for traders to get out of the market. Now we are having, when that trade is done, Now we're having some counter reaction to this overnight. Look how the daily, I mean, the accumulator is drying, but the period I don't like this low here. This is good. This could be good. It's drying here, but still, what happens when the market opens inside previous range? They also chop are high. What is chop? Such chop is a market going high, going low, going high, going low. And now look at the low. Well, the low is what's being made. Yeah. When the market is down here making this amount of volume in very short range, something good can come out of that. Now, I'm going to be part of that. That's the question. In my case, I decided not to be part of this. The market can go all the way up to here. Okay, I will miss, so what? But that is my decision. I made that decision when the market was down here. All right. Now I got to be ready to change my mind as well. Now look at this, the amount of volume that's here. No? Do you remember when we talked before about how I use this comparator? You know, usually when the action is coming to an end, I like to see this kind of volume here. Big blocks of whatever is here. We buy? Don't know. Is selling? I don't know. We just know after the fact. The market can break here, take this congestion here and this congestion out, have a huge break here. So that will mean that it was selling. Or this could be buying as well. Buying, and when the market comes down through these areas here, the congestion areas, they will be forced to cover. How do you cover a buy? How do you cover a long position? You sell, right? So as I said, it is very important to try to be in sync with the market, to understand what the market is doing, so you build your strategy first, and then when you execute your strategy, you could you can have an idea if your trade is working or your trade is not working. Okay, you got a 4100 market 3 times has been bought from 4100. Remember when we have this in the daily, in the intraday, we got 1, 2, 3, or 1, 2 here, 1, 2, 3 here, 1, 2, 3 bought from this level. In the intraday, we have a reaction. The reaction time in the intraday is shorter than in the daily. The same thing that happened here in the intraday. We've got this period G, H, L coming pretty much around 3 ticks from each other between the high and the low, or these 3 levels here. We got the same thing in the daily as well. Around what level? Well, around 4100. What level do we had here? Let's check if there is something. There was nothing here. Maybe high overnight is too. Well, it could be overnight. No, overnight has been traded through already. There was nothing here on this day. And this trade, to finish the thoughts, right? What happened here? Extremely low volume here. The way how the market made this rally, the absolutely incredible wide overnight POC here, the spike to the downside, the rejection on the spike triggers this. Gives you this trade to the downside, but that trade is over now. It's done. It's done. All right. Remember? So now let's go to the next trade. So what is the next trade? What can be? Don't know. Nobody knows that. Right? Remember this. When we have a distribution curve we were going to organize data, or if this is a trade to the downside, we have this day here, this day here, this, using this information that we have here, we have the upside spike coming back inside the range, inside this range, you know, using as a destination this nuance here. And if the market re-enters this lower distribution here, which it did at this level, if the market re-enters this distribution level, monitoring for continuation will give us this low as an ultimate destination trade. Okay, but mainly is this. This is extra, whatever happens. And look at what happened here. It didn't take this low. For this, that's my trade. Okay, that's one trade. Now, what the stage of the trade of that trade we are? We have the innovators, maybe selling in here, who knows, right? Early adapters, maybe selling, maybe this one selling here. Early majority, late majority, early majority, okay, today here. Today's session, right? The overnight session. Late majority when the market takes this, level out. Late majority. Okay, late majority here. Okay, innovators could be here. Early adapters here. And laggards, And even I will go ahead, maybe laggards at all this section here. Is it the laggards? Laggards are the one that enters the market when the trade is, when these ones, and these guys, these ones are getting out of the market. These are long gone. We still have some of these or these ones, right? Those are the stages of a trade. So what do I do now? So if I lost here, I'm lost. If I going to keep my trade, I am long here. I went long up here, or I went short down here. Or I went short down here. I'm waiting. The market comes back to me. It doesn't allow me to see what's next, what could be next, what is forming, what is developing. It doesn't let me to get in sync, to be in sync with the market. And all of this, I mean, I'm not saying this is the way, but it helps, right? Before doing anything, it helps to understand, or try to understand what's going on in the market first. Now you have this day here. You have this day here. You have a non-excess here. Let me show you another trade, not potential. In this once is over. These ones are not easy to execute. They're extremely hard, especially this one here. Right, we have 1, 2, 3 distributions here. These days probably long liquidation here because it looks like a long liquidation. Non-excess high here in this overnight session. Prominent overnight POC. Lack of excess here on the high, lack of excess on the lower side, lack of excess on the high, lack of excess on the lower side. Give us all of this lead to this day here, and the potential for a sequential trade here. No, I don't know what the market was going to do here, but the odds were, if this high was going to be take first, likely the next one was going to be the lower side for the overnight. Was one trade. Okay. Upside continuation, we'll see the market taking this high. It didn't, right? It took this high, Coming down to downside continuation, we take this high out. It did. It make us this low. And from here, right? From here was really bad here. Because the potential destination was this high here. But it tested your conviction here. It was really hard, painful, and extremely risky. But now, if this is a trade here, what stage? What stage of the distribution curve are you? Where are the innovators here? Where is the early adopters, late majority, early majority, late majority? Where are the laggards here? Laggards will be buying this trade here, up here, or buying maybe in this area here. Right? So that's another trade, but it can be seen just after the fact. I can make this kind of analysis or this kind of observations after the fact. Being present in the market is extremely hard. It is extremely hard. Now this high, let's put this one. This high has been repaired. The high here has been repaired. There's some volume that is not. It is. I think there's kind of like taper here. There is not. I don't like when the market has this kind of histograms. I don't like the outside, especially on top of that the 4100. Well, the buying coming from 4100 here. But this market is short also as well from the overnight. How many times have been bought for the 4100? With this volume here. Now coming back to the stage of, in this case, of the trade. You can use this for several other things, right? The laggard section of the market, the laggard section of the trade of the market, this doesn't mean that these guys always have it wrong. Because guess what? If they have it wrong all the time, they won't be here in this market. This is when the emotional part comes to play. If you perform an act that gives you a reward after 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 10, 1, 2, 3, 4, 5, 15 times you got 15 times you are here and you got nothing. And the 16th time, okay, you got to win. Boom, you got to win. You have all of these that have lost before. And then you say, the emotions say, oh, okay, finally, I figured out the market. The next time maybe you can have this at the fifth time, the sixth time. Okay, another win. You will lose 5 times. Well, I got another win here. Great, right? I have 2 now. If this would happen constantly after 16 times, you will know, right? You will know. Okay, 15 times I bet because that's what they're doing, right? They are betting that without knowing what's going on. They would just get away the market. They would just quit. It is the randomness, it is the randomness part of this business. Random, did I spell it right? I don't know. It is the randomness part that make this kind of participant. They can be anyone. It can be anyone. It can be me, you, even bigger monies could be in this section as well. We never know. It's this part, okay, the randomness that keeps that retain these participants in the market all the time. Because if you give somebody something for every 10 times that they do something, first time, boom, they do again. After the 10th time, you give them a reward, a win. After 10 times, another win. Oh, great. Another 10 times. Oh, great. If if you stop giving them a reward after 10 times, they will just try maybe once or maybe twice, maybe two more times before before they stop doing altogether. But if you have this randomness, and this is science, right? There are testing behind this. It is not just with humans, but with all the kind of animals, right? If you add random to this exercise, to this experiment, these participants here could be humans, monkeys, rats, um, will try, you know, somewhere between 200, 300 times before they stop doing what they are doing altogether. Right? They will need to fail like 200, let's put it 250 times before they quit. Okay, I'm not for this. I'm not made for this. I have nothing. And they will do that after this amount of times. Now compare these results with this one over here. When it's constant, after if they don't have the reward after 2 times, they will just stop doing it. 2 or 3 times, and they will stop doing it. They won't do it no more. The same participants, the same here. Just put those at randomness, and you have these results here. And that, my friends, is market. That's an important part of markets. The market dynamics here. And that's also another reason why it's very important to learn about and to get to know ourselves. When you get to know yourself, you get to know your market, you can build something around that. You also get to know other people. Poker players have that. Professional players have that. They know, they learn to, you know, they learn to about other people's behavior. They learn about their competence. The thing is, most traders don't realize that this is a performance that we are doing here. We are competing against each other because there's people out there that's trying to get your money, and you are trying to get everybody else's money as well. Tell me that's not a competence. If it's not a competence, then what it is? Yeah. And most people fail to understand that. There's people think, I saw many times that people think that people trade the market as an ATM machine. Okay, I'm going to come to the market after 5 minutes. During my break, I got my regular job. I got 15 minutes break, a 30 minutes break. I'm going to come back to the market and make. I don't want to make $200. I might want to make only $30, only 40, only 50, only 1 point. That's what I'm going to do. But that would be similar to. I have used this example that I got a physical culturist, a bodybuilder that once told me, no, he's huge, right? How bodybuilders are. And when you go to the gyms, you know, there's new guys that come, and they see the pictures on the wall, the Arnold Schwarzenegger, Gary Coleman, Roy Coleman. Say, I don't want to be like that. I just want to be, just like this other one, pointing at to somebody, some picture out there that's not as big as Arnold, for example. But do you know the job that it takes to get over there? Right? That kind of thing happens here. It happens all the time, and that can be very harmful. It's also it and the counterintuitive thing here, the ironic thing of this is that That is what gives us an opportunity, actually. Right. The relevance, the importance also of having a mentor, it is very important. Now, if you follow somebody who is successful, or if you have a mentor, anyhow, you can have a mentor in trading or in anything, right? You can have Tom Brady teaching you how to be a quarterback. You can have Lionel Messi teaching you how to play soccer. You can have LeBron James or Kobe Bryant to to teach you late, uh, how to play basketball, how to throw, how to make throws, right? How to dribble. They can tell you everything, but that will not make you successful. Knowing that is not enough. You need to work on it. Now, if you are doing this as a part-time job, knowing this will give you sometimes some people get scared of this. Okay, I don't like what this guy is talking, or I don't like this. This is BS, or this is not for me. But the irony of this is now that you know the risk that you were taking, you step out. And when you didn't know what risk you were taking and you were taking high risk, you were willing to keep trading. You were willing to keep spending money. Can you see how counterintuitive this business is? It is everywhere, you see. It requires time, patience, and having the right. Um, I don't call myself a mentor because I am learning as well. I'm learning all the time. Jim Dalton was my mentor, right? But he was repeating the things and everything that he teaches is here. Believe it or not, it's here. You got this. You also have Jim. Let's put Jim Dalton here. You also have his what is this? Oh, no, this is not Jim Dalton. I don't know who this is. Maybe. I don't think he has this is Jim Dalton. All right, this YouTube account. I don't know how this is. Um, it's unbelievable how little subscriptions he has, right? But um, um, in this, not James Dalton, by Jim Dalton. Okay, this is him. In here, this is somebody have updated a intensive. Everything he teaches is in here. If you watch this video, everything he teaches is in here. The thing is, as I say, in the same way how I cannot learn if I wanna be a hockey player or I don't know who's a professional soccer. You wanna play soccer. It's not enough to have Ronaldo as a mentor, right? I have to work on it. He can teach me everything he knows. He can talk to me, you know, 8 hours a day for 8 weeks straight. That will not make me good. That will give me something, but it will not make me good. The same thing happens here. You will know something, but it is the practice. It is the field where you will learn. Will give you experience. And the thing is, but how you survive, because the rate of failure is incredibly high in this business. How you survive until you learn. That's the thing, right? But when you start learning, you understand that this is very risky, right? You can instead of trading futures, trade futures. Maybe you can trade micros. Micro 1 point in micros is only $5. Or you can trade the SPY, maybe, right? You can trade SPY here. Or you can trade SSD. What is SSD? Or SSO, yeah. Yeah, you can trade the SSO, which is double long. Until you're linear, because the risk that you take here is lower. A huge movement here could be only 1 point. Meaning that if you will lose here, you may lose $1,000. Maybe here you will lose 1 or 10. But before getting to that, you will know that you are wrong, right? Before taking 10 points, before taking 10 bucks as a loss, you will know you will not let you don't. I mean, if you let that happen, if you go ahead and lose everything all of the time, you need a lot of job to do. Even doing that is going to be better here than here. Right? So those are the ways to reduce risk while you linear. I hope somebody told me this before. Because it's very painful. It is very painful to linear trade without proper mentorship, without having a mentor. All right. It is 10:45. There's a lot of job going on here in this market. If you have any questions, please let me know. Any comments? Otherwise, I will see. I will call it the morning stream for today. Wish you can see you. No, I wish you a good rest of the morning. Stay safe out there. Happy trading. I will come back at 12:30 with a market update. Alright, guys. Stay safe out there. See you.